All right, who's going first?
All right,
Hey,
Maddie,
Frank
you want?
starts. He always gets to pick.
Ooh, listen, I'm going to. You know what?
He's gonna
I'm
make
going to
me
go
do it
first
because of how
today.
garbage it is out there right now.
Yeah, I'm going to go first
I
today,
like it. I
and
like it, Frankie. What do you got?
this is sparked from our conversation on Lockheed. We're seeing some
Okay.
pretty decent movement in those stocks. It's really tough to go after the GDs and the LMTs right now with just the
Pounding
tremendous
the table
movement
though.
that they've
Mm.
had. But what about SPR? Another little aerospace and defense company. These guys, I might have brought them up last week in Frank in this segment. I can't remember. I know brought them up in a few different places for breakout
The potential
potential.
breakout, yeah.
They didn't break out, which is fine with me. They pulled back with the market, but I think what's happened here in this scenario is number one, the breakout is still really, really clean. They've got a really clean path past that resistance level to the 200 weekly that's somewhere in the general ballpark of $58. So a nice little window. The breakout still very, very much in play as far as I am concerned. But I also think that this could fit into maybe a scaling into the breakout scenario if I like the overall space. And if I'm interested in maybe getting into one of these defense companies without having to chase quite so much, I think we could probably scale in above today's high with that 58 as our first target. My rule there, probably not much different than yours, Maddie,
Yeah.
is risk reward needs to be at least 1-to-1 to that breakout point. Just using
You got to have an edge, right?
gotta have
If you don't have an edge, everything stops. But if you're front running, it's got to be 1-to-1 to the breakout channel, and then it's got to be 2-to-1 on your T2 target.
Exactly. And just using today's candle, kind of today's high, today's low, which would, be, a fairly traditional way to get into something like this, right? It would also put our stop loss below the 20, not just intraday low. That does put us in a scenario where we're about 1.3-ish, 1.25, depending on exactly how far above and below we're going, with the ATR rule, up into that resistance level, which we really are going to beat the heck out of the 2-to-1 rule, because if you're like me and you think 58 is the target on the breakout, that puts us over 3-to-1 to that 200 weekly at, again, approximately $58, which is where I would be targeting it from a trading point of view. I'd expect a pullback at that point and then, kind of move on from there. But just looking at either the breakout, if I want to kind of be a little bit, little laid back, little conservative.
You're trying to front run into a breakout you really like.
Exactly, in an area that I think can run. We're seeing some big movement on it right now. Doesn't have to be a front run candidate. Whenever I'm front running a breakout, it's like a third of the position. Nothing too crazy along those lines. So breakout candidate at 58, maybe even a little scaling in if we wanted to be a little more aggressive and get exposure into this industry in the market. Anything you'd add, Maddie?
I'd just say the industry's hot right now. And even if Russia and Ukraine slow down, I still see aerospace and defense doing pretty decent. I think this kind of sparked something there. You're seeing just price action on everything in this space. Let's just take a look at, some of the big dogs out there, Raytheon here, just pounding the table.
Yeah.
Obviously we looked at Lockheed Martin earlier today.
Yeah. General Dynamics.
Fantastic. You look at General, right? GD doing absolutely fantastic. One that did potentially stand out to me that maybe hasn't ran too aggressively and maybe gets a little bit of a quick snapback just in terms of comparison against your front running one on the breakout.
Yeah.
Would be the knock. And every time we talk aerospace, always, and we were
the knock, right?
we were talking about Tom Cruise earlier, the knock list, right? The Mission Impossible. So, anytime we talk aerospace and defense and Tom Cruise in the same halftime report, I'm going to talk about knock. And so I do like knock breaking out of the 410 barrier. This thing isn't necessarily overextended on that weekly breakout there, Frankie.
Yeah.
And so I do think knock is something that's on the radar. But if you're looking at something that is more of the a little bit cheaper of a stock, right? A little bit of a cheaper of a stock, and you're looking at something you can maybe get into from a front running perspective, I like the Spirit breakout here potential. It's obviously isn't showing the strength that say a Lockheed or a knock or a GD is showing here today. But this has been a reversal analysis in SPR. It's and you're looking at a resistance level at 52.5 that is pretty consistent throughout the past year or so. I think Russell 2000 type consistency against that neutral pattern on SPR. A breakout here. I don't know. A lot of things do exist, but technically this thing feels like 58.
Yeah.
Like it just feels like 58. And so I like I personally like knock a little bit more. And then obviously you're waiting on GD and you're waiting on Lockheed, you're waiting on, Raytheon. But from an active trader perspective, I feel knock breaking out on the weekly chart, more position style there makes some sense. SPR front running coming into that 52.5, 53 breakout. That makes some sense. And specifically on SPR, knock's not going to run 10% like SPR will. SPR will move a little bit.
Right. It has those personality traits, right?
Yeah. And so if you're looking at it from a swing trader's perspective, I definitely like SPR in the front running status with the potential break of 52.5 by 53, a little bit more than I like a swing trade on knock. If you're looking at position, I like knock.
Yeah, makes sense.
Yeah, no, SPR was one of my pandemic stocks that, when I dove into the company and everything, in the midst of the pandemic, I did a lot of plays on SPR. So I know the company pretty good. Like the technical setup, like the range. So
what am I going to do? Let's go with, since this was one of Mark's stocks that he liked, let me go with another Mark stock that he once liked. And let's see if I can get him on it, liking it again. Let's go to Penn National Gaming here. Penn had a decent earnings report this quarter. We're tracking Penn through reversal analysis, and what I got this as is a Head and Shoulders reversal candidate. I think everybody and their dog's going to like a lot of reversals over the next couple months there, Mark and Frank. And Penn National Gaming is showing me a pretty consistent reversal formation. And let me draw some lines for you. Let me get my Epic pen here. First and foremost, that is the left shoulder. That is the head. And that is the right shoulder. Now,
the only thing missing from there,
very consistent.
The only thing missing from that was, here is my handle, here is my sprout.
You want to finish?
I'm good, but I'm good and happy.
All right. This now to draw when you're doing a head and shoulders, okay, ultimately the head and the shoulders shows you the entire reversal conversation because you have slowing momentum, you have double bottom analysis. Now you're looking at what is called the neckline. Now, when you're drawing a neckline, you can draw a vertical neckline or a horizontal neckline. Personally, I like horizontal necklines. You see that horizontal neckline there? That gives you a very clean reversal confirmation. And so I got Penn National Gaming as a reversal candidate with a Head and Shoulders formation. I got this as a resistance level, and this can be a little bit debated on the reversal handle, but I'm going to put it right there in the 52.5, Frankie, is where I'm going to kind of put that 52.5, maybe even 53. Frankie, in terms of if you wanted to, be a little bit more confirmation. What I like about this one, though, is it's a pretty consistent reversal on the backs of a pretty decent earnings report. And with confirmation, it might take a little bit of time. We're only talking about $50. And I do think there could be some front running here, but ultimately I'm just going to talk about the breakout. In terms of the breakout, what I like about the breakout is I like the fact that upon the breakout, there's not a lot to stop it. It opens up pretty aggressively. And that you got to like as the active trader, where unlike the nastiness we're seeing in the S&P, right? You look at the S&P, it breaks one level of resistance. You're staring at a million other levels of resistance right now. It's hard to project on that. On Penn National Gaming here, let me take off my reversal analysis there. Give me 1 second. on Penn National Gaming, it opens up there. You come out to the weekly chart here, you are kissing off old resistance right there at 40. $40 was the pandemic high before the pandemic. So right before the pandemic hit, $40 was that level. You see the pandemic hit, comes right back down, worked all the way back up. Look at $40 here. Look at $40. Stop that price appreciation. Look at the earnings report. Look at the breakout. That breakout, look at the volatility build off of that. That shows you the importance of the $40 breakout. Then this massive bearish downtrend starts working its way down. And where do we start to see reversal analysis? Low point of the head was right there at $40. It's coming in line with the body, with the left shoulder and the right shoulder, right at the 200 weekly. Now we're looking at reclaiming a 20-period weekly moving average right at 53. I think if we reclaim 53, there's a foundation of support underneath 53. You reclaim 53, 52 and a half, 53, you're reclaiming the 20-period moving average, and you see that same openness. It opens back up on the weekly chart. You come back to the daily chart. Once again, it opens up there. I think we got clean air. I think we got a clean reversal, Canada. What do you think?
Yeah, I mean,
yeah, absolutely.
Yeah, everything's spot on. You got a nice moving average pocket into the $60 marker. And while you don't need to do this, Maddie, if you do look at the monthly chart, it's sitting right on that monthly 50 inside candle with just a very short amount of time left to go on the month. Really like
50
it.
Weekly.
Really like these guys. I think monthly. It always it just is going to come down, which is always fine, I think, because we all want the traders to be out there seeing the same patterns that we are, right? I don't want Mark to be selling while I'm buying because he's having a negative impact on me, right? So I think the only real nuance here, because I think the technicals and the pattern are just pretty much, spot on. It's just how do you get in? Where exactly is it? The 52 to the 53, the 20 weekly? What do you need to see break? But I really do like that little window from, approximately 53 to 60. Love the pattern. Really like this one, Maddie.
And again, for every trader, they're gonna select the strategies they trade. They're gonna select the stop loss placements they trade. I like this as a pure reversal candidate. No creative options. I'd like this as a pure reversal candidate.
I would agree with that. That's a very nice selection. I like it. I wish I would have went with them first because you probably weren't going with SPR. But you snooze, you lose, right?
I was not going with SPR. I was thinking knock though. Like I was looking at aerospace just like you were today, and I'm sure many other traders were looking at aerospace here today. And I mean, it was just the Lockheed GD and Raytheon examples were just skyrocketing, and it was like, wow, those are really good breakouts that lots of people missed. Where's that secondary analysis? You know what I mean? Where's that secondary? And I did see Spirit. I like the front running analysis on Spirit. I like knock from a position perspective, and maybe you wait on a little bit of consolidation on Lockheed, Raytheon, and GD. But again, I like this. I like the industry. PENN's more of a traditional reversal.
Yeah, for sure. Yeah.
What you go next?
All right. Next up on the menu, I think I am going to go with a similar type of analysis, and that's VRNS. VRNS. Varonis Systems.
Okay, I see a little bit more of a V-shaped bear stop out type.
Little bit of a bear stop out. So a couple things going on with these guys. If you go back in time, a whopping 2 weeks.
I just want to show the bear stop out where that would be.
Yeah, that would right in there. A couple of weeks ago, I was looking at this as a potential 950 pinch, right? And then the market happened. And well, that went away. But we did hold up. And as you can see here on this weekly chart, held the 200 weekly and have also put in a higher low on that and threatening at that bear stop out point, which would be also the bull breakout point, right? That would get us above the 9 on that weekly, obviously above resistance and taking out that 50-day simple moving average as well. So we've got the higher lows. We've got the original failure at resistance. Makes sense. Buyers come back in. Pretty clean entry. I know how I want to get in. I need to I get through a lot of stuff if I can break out those highs from a couple of weeks ago, right? If I can get above, what is it, 42, I believe. I've broken a lot of stuff. And we might not. That stuff's hard to break, right? That's a pretty decent little layer right on top of where we are. But you do have that curling 20-day simple moving average kind of propping us up potentially as a support catalyst along the way. If we can break through that resistance level, you do have a fairly clear path. You got another one of those moving average pocket type of scenarios where you're running into the 20 weekly at around $49-ish, give or take, probably a little bit below that. And you have some old junk in there as well. These guys have
a lot of resistance,
a lot of
49.50.
Yeah, there's a lot of junk, but nothing that scares me, right? Until you get into that zone, right? As we kind of get into that 48, 49, where I've got that 20, where I've got a little bit of junk from days gone by. I think that's a very sensible, at least first targeting location, if not, the swing targeting location, depending on how you want to approach it. If you're a little more patient, willing to do a pullback, maybe there's a little more upside beyond that, but just a little bit of a breakout. Ideally, my stop loss will be below the 9 EMA when that breakout occurs. Today, that might be a little trouble from a risk reward point of view, trying to get up into that 49 range. But if, say, 2 days go by, probably isn't, right? If 2 days go by and we break out, that 9 EMA will be increasing. We'll probably have a new higher low that can act as a little bit of a stop loss location to kind of go along with that as well. So very similar in the kind of reversal style, a little bit of a different reversal look, but same general type of feel as PENN.
The only question I would have is triggering mechanism, right? You got I think you got the zone from about 43 to about 44. You can aggressively get in above 42.60, I think, Frankie. Yeah, I think that's the top of last week.
Okay. Yeah. So
I think aggressive, you can get in above the top of last week, conservative above kind of the range here, the body there. I don't see any resistance until you really work up into that 49.50 level. It's more aggressive than the PENN, right?
I would agree.
This is more of a, think about this as more of a V shape, right? Whereas remember, and this just kind of helps me when I'm kind of breaking it down here. Just give me 1 second. Let me come there. So when you're looking at those traditional reversal analysis, you have the traditional W formation, correct?
Yep.
You have the head and shoulders formation, correct?
Yep.
And then you have the deep retracement V-shaped one. And so basically what I'm tracking on PENN is the middle one, and what you're tracking on VRNS is this one on the right hand side, right? And so basically that's just in general what your three primary reversal candidates are. And so when we're looking at that, give me 1 second, let me take my Epic pen off. VRNS here. When you're looking at that, you see this scenario, and let me paint it, right? You have the deep retracement, and the deep retracement has always got to get above that 20 period, right? You got to get above the 20. You got to start working your way up a little bit deeper in terms of the retracement. That allows the market to establish a higher level of support going into that same breakout channel. And so you're tracking VRNS as more of a V-shaped bear stop out right above that channel, trade the momentum, PENN, more of the head and shoulders. I don't have a problem with it. I think it's technically consistent. Personally, I like the PENN reversal slightly more just because of how it opens up, and it's not as
well, it's been longer
volatile,
developing
right?
too, right? So it's
exactly
had a more natural feel.
100%, Frankie, 100%. But if you're looking at V-shape, this is what it does look like. This is what it does look like. And the only thing you're waiting on is the breakout.
Yeah. Mark? Anything you'd like to
Oh
add?
no! I mean, listen, you guys can bring me all these reversal patterns, beautiful consolidation
Just
breakouts.
wait for the next month.
I mean,
It's
this
gonna
is
be
my
dominated
kind
by
of like. I
reversal
don't have to
analysis.
chase momentum. I get these nice,
Oh, good.
pretty
I
stabilized.
got a momentum one for you next. That's fantastic.
Okay, well, way to spoil my Tom Cruise weekend party.
All right, I
already.
won't spoil your Tom Cruise weekend. What I'm going to go to though, I'm going to whet your appetite a little bit more with reversal analysis, Mark. I'm going to give you what you were asking for, and I'm going to bring you Albertsons.
Good old Albertsons.
Boring, 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 boring. Say it with me.
Boring.
Albertsons. Now, what I like about Albertsons here, again, another little bit.
How is Frank not bringing up Albertsons?
We debated it.
Yeah,
we did. I should have fought harder for it.
Albertsons first.
He did. I should have fought harder for it.
So me and Frankie had like a 3-minute little prep conversation right before we got going here today, and he's like, "What are you doing?" I'm like, "Well, I don't know. I got a couple staples." He's like, "What staples do you got?" I'm like, "I got Albertsons. That's what I got." Frank.
He did. He said it's that fast too, like just to make sure I didn't have a chance to.
I was Russia claiming territory.
Yeah, he was quick on it for sure.
I was quick on it. Here's what I like about it, and Frankie knows this already. $30. What is $30 to us, Frankie?
$30 is a beautiful number.
Beautiful, significant whole number, isn't it?
It sure seems to be. Maybe 30, it's all mental, but it sure seems to be.
It might just be mental in you and I, but I see it play out a lot. I've said 30 is the new 20 before. I'll say it again. I like $30. I do see $30 act as a significant whole number more times than say $40 or 60 or 70 or whatever the case might be. Obviously, the most significant ones are the ones that track currency denominations, 5, 10, 20, 50, and 100. But $30, it's here tracking right against the $30 handle. And when you're looking at this from a intraday perspective, $30, you see that wick. Look at that wick. Oh, Frankie, look at that cash open.
Yeah,
that cash open was strong. And what stopped it? $30. What's it working into? What's stopping it? $30.
30.
What happens if it breaks 30? It now acts as a support level. The same way it is currently acting as a resistance level. And so I think the trigger here is what really stands out, triggering above $30. This, and Albertsons isn't necessarily a swing trading stock, more of a position style here. But what I like about it, to even before the $30 break here, I like the increasing support level that is tracking very consistent against the 200-day moving average.
Mm-hmm.
It's not a difficult assessment. I don't need to draw some lines. I don't need to talk about the 3 styles of reversal characteristics. The 200-day moving average has had a double bottom with confirmation. You've reclaimed all your moving averages, the 20, the 50, the 200, and now you're looking at a trigger above 30 with an easy stepping up the ladder to 32, and then obviously it's 34. Then we're walking up into the all-time high. I like Albertsons here, and I like it as an ad from a position perspective. Frankie, what do you say?
I love Albertsons as a company. I love where it is. I love that close of the 50. I'm assuming at this point in time, but barring some weird turnaround, we are going to close that. Absolutely. I do think you nailed it right on the head. I think it is more of a position than a swing trade. Although every now and then, Albertsons can.
It can fly. Listen, if Albertsons wants to act like a tech stock in this breakout of 30, be my guest. I'm not
happy with it.
No.
Yes, I would be happy with it 100%.
Don't get me wrong. That position trade can act like a swing trade if
that's
it
what it wants to do. I am more than happy to accommodate. But yeah, I am with you. I really do like Albertsons. I really like this close here. I remember, a couple of weeks ago, Greg brought him up in the Trade Masters webinar. I think you were with me in the chat. Like, the only reason I'm gonna not vote for Greg is because he was pitching a covered call instead of going directional. So I have a little bit of bias when it comes to Albertsons, but I really like that selection.
I think after I discussed Albertsons, Frank's going to go help the revenue stream by shopping at Albertsons today.
I might. I think that's a bold statement. I like Albertsons, but I don't like
the house today.
I don't like Albertsons that much.
There you go, buddy.
I like that chart, though. I mean,
I like the chart too.
Yeah, like very nice looking chart.
All right, Frankie, you got one more?
I got one more, and I'm debating between two.
Ooh, actually, let's look at them both. Let me help you.
All right, so I'm looking at a deeper pullback here on VRTX.
Okay.
Pulled back into the 50 and the 9 weekly. Going to be a really decent little pullback, particularly on the weekly.
Much prettier on the weekly chart than it is on the daily. Yes.
But let me paint you a picture, Maddie. We are talking next week, and we kind of run up into the 20 and get pushed down maybe a bar or two. Then we're pushing back into the 20 next week, and we're taking out that high from the 16th at 237, we'll call it. Can't you see that picture?
I can see it. I can see the scenario, but again, you're talking about 2 pivots in the future.
Oh, listen, there's only 2 pivots in this market. Come on now.
That's 3 days at this speed. Okay. What's your other one? Let me take a look.
My other one is another reversal on CHGG.
CHGG. Personally, if you want my advice, I would say the reversal has a much better chance of getting a passable grade. There's some volatility in that pharmaceutical play.
Sure, there absolutely is. That's the good and the bad.
I do like the weekly chart, though.
The weekly is looking really, really nice. All right, we'll go with CHGG. We'll go out with CHGG. So
I just like that. I do like the increasing support right against the cluster of every moving average.
Sure, yeah. You know
what I mean?
Just a disastrous earnings a few quarters ago, right? Back in November. I mean, just an absolute nightmare of a
misses
situation.
and guidance everywhere.
And I mean, that's just what happens, right? When you miss like that, it's going to be most likely a while before anybody has any faith in you whatsoever. And these are just the very beginnings of maybe I do have some faith in you. I mean, the nice thing about being beat up so badly is there's a lot of room to go to the upside, right? Bad side is there's lots of battles along the way. What I like about these guys right now is you kind of have that very clean retracement, as you notice, into that cluster of moving averages, and then that big fire back yesterday, arguably at least taking out the intraday or very short-term downward trend line, and then a nice little inside candle at the top end here today. So as opposed to getting rocking and rolling and blowing up like a lot of things in the market are today, it's taken a little bit of a breather. It did come down and test that 9 EMA, use that as a springboard. What that does is that gives me a legitimate stop loss location. It gives me some faith and saying, hey, you know what? You can put your stop loss below today's low because we've seen some price action off of that. Whereas, if we're talking about this yesterday, I'm like, well, you kind of got to go down below 27.50 for a stop loss realistically.
But I also like where that stopped today.
Absolutely.
Right? To help with that stop loss placement, because if you're going all the way down to the low prices at 27.5, you're just taking too much risk for this trade.
You're just not going to make it work, right?
Look at the old resistance from the last couple of days, and the volatility hits today. It stops on a dime right where the old resistance level was. It works back, and look at the cleanliness up at the top. Look at the cleanliness right there at about 30.80. You got to like that as a potential trigger.
Absolutely. A really nice, easy entry type of methodology.
I honestly think it's a cheap risk.
I think it's a really cheap risk type of a trade.
Tight stop. There's 30% chance it works out for a potential home run.
So, yeah. And the thing is, if you think about these guys, there's only one real significant challenge, in my opinion, in the short term, above where we currently are. And that's that 20 weekly that's not too far above us. I like that as a first target, or even an additional, scale in type of a location. Because I think you should respect that average at all times, even when it's inconvenient for you. But beyond that,
that's working right towards the tops of last week as well, Frankie, right there in that 33 level.
Exactly. So it should give us, some good momentum. If we can push through that, we're breaking resistance, breaking the 20. We've got a pretty good room to run. I mean, there's just no real price action until 40, right? Or 39.50, the top of that gap. Obviously, if we fill that gap, I think that's very naturally a place to look for some profit, locking in some profits. But I think you're right. I think this is one of those where you've got good development, relatively cheap risk, high upside. Maybe it works, maybe it doesn't, but there is a good return if it does work. If this does work, you're probably looking at a 5-to-1 type of a trade. Does this work out, 20% of the time? I guess that's up to you and your systems to decide.
Yeah. I think it's one of those ones, if you're looking for a potential home run type.
It's a profitability. It's not a probability. It's a profitability trade setup, right?
Yes. You have an edge to 33. You don't have an edge above that. And so I think you're easily, you have that edge to 33. Above 33, I think it's more challenging because of that 20 weeklies right there. And obviously there's a pivot point there from 2 weeks ago. But I like it here, Frankie. And I do like that stop loss placement. Again, in a perfect world where we're not dealing with Russian volatility, you would love that stop loss underneath 27.5, but we're dealing with volatility here. So I do like it. It's aggressive, but I do like it.
So yeah, and even if you don't like this particular one, if it's just a little too aggressive too soon, I definitely think this is worth keeping in a watch list to see what happens if and when we do close above that 20, because we've got some huge moving average pockets that we can work with if we can win that battle.
Well, let me say this. If you don't like that one, you're going to like a lot of the other reversals we put on those watch lists over the next month or so.
Yeah. There's going to be plenty of options.
Yeah. All right. My last one here, I am going to go with a darling of Tackle 25, a darling of tackle trading.
Beautiful.
FCX. Now, what I like about FCX here is obviously a breakout potential here. It's very, very choppy. We're going to smooth this out. We're going to look at that weekly chart here. You're kissing up against some very, very important resistance levels for FCX that has played a role in stopping price discovery for the better part of the last year. You've had multiple attempts to break out of this channel right there at about 40, 46.20. You can see the top of the wick. I think that is a perfect number to kind of work off of on the weekly chart, but you're kissing up against a very, very major level of resistance, which if broken should see some price appreciation here. Now, coming back to the daily chart, you are a little bit overextended on the daily chart here. I like this above the resistance channel. It's a weekly breakout type trade. Obviously, FCX is something many in tackle trading love covered calls on, love investing in. It is that copper play for a lot of market participants. And I'm just going to make this very, very simple. It's coming into a very important breakout channel. It has swing trade written on it. It has position trade written on it. It has a lot of different cash flow systems written all over it. I'll leave that up to the trader to decide the type of strategy that is best for FCX, because FCX is one of those stocks that swing traders will love when it's consistent. Cash flow traders love all the time. It's obviously a cash flow darling, as we've stated. But again, this is just a very simple breakout on the weekly chart on a company that is very important for copper in general, basic materials, and it's a leader in that space right now. So I got FCX on the breakout. Chucky and Frank, what do you think?
Yeah, I mean, I like this one. I did this one for my Frank's chart for Tackle Trading Twitter yesterday. Because of the pretty much everything you pointed out. We talked a little bit about maybe front running it. Obviously, that was then.
That front running is up already.
That was then. Yeah. This is now, right?
Yeah. We've had that 5% front running already. Now we're talking the breakout.
Yeah, now we're at the breakout point, and I like it. I think there's a couple of things that you can think about from a targeting point of view. For me, I don't know. You probably are going to agree with this one, Maddie. A $50 target 50. Kind of for the swing trade. Yeah. It seems like if we can break this 50, doesn't seem like it's a tough gig.
Feels like a pretty quick journey to 50. It
feels like a pretty quick journey to that point. And I'm actually kind of looking at this as a little cup and handle over the course of this calendar year, right? Yeah. And so I think that more position aggressive style leads me to believe these guys are getting up into that 56, 57 range if we can actually break out. I mean, it's tough to break out, right? I like its chances, but that's all that they are until it has broken out. But yeah, I really do like this as a breakout candidate. Beautiful weekly chart. Favorite for a reason. There's a reason all of us here at Tackle Trading like to trade FCX, right? It tends to treat us pretty good. So yeah, I'm 100% on board.
Yeah, and specifically over time. I have a philosophy on FCX on breakouts very similar to other, like when AMD sets up in a breakout, I love it. It doesn't work out all the time.
No, but that doesn't mean you don't love it all the time.
That doesn't mean I don't love it.
It's like me. Sometimes I disappoint you, but you still love me all the time.
I love you all the time.
Exactly.
All the time. Yeah, all the time. So does everybody at Tackle. They love you all the time.
They just don't get enough of me then.
Yeah, me and Mark, they can take every now and then. You all the time. I kid.
All right, Mark, anything you add?
Frank is our Tom Cruise.
I don't know if that's.
I don't think that's the analogy I think about.